You mentioned in passing the wealth tax. Could you tell us more about it and perhaps some of the ways in which one can legally minimize it?
Wealth tax is not the right word, it's a real estate wealth tax. In the past, before 2017, we have a wealth tax which was applicable to any assets, estate or non-real estate. And since 2017, it's limited now to real estate assets after taking into consideration bank debts.
Right.
In the past, it was possible to put any kind of debt, but the law has recently been hardened in order to limit the possibility to reduce the basis of a real estate wealth tax by deducting debts.
Right, general debt.
Yeah,
and so
debt.
Bank, you mean a
third party financing.
Okay, right, third party.
Yes,
okay.
It must be a real third party financing because one of the game in the recent past was to have infinite bank loan.
Yeah.
So you never repay the bank loan, so you can deduct it from the basis of your real estate value. You never pay any real estate wealth tax. So this loophole has been closed.
Okay.
So now there is always the possibility to deduct the bank debt for sure, but there are some strict rules which are applicable to avoid any excess of playing with the figures.
Okay. And what if you hold the foreign real estate through some sort of structure? So, for example, you hold it through a limited liability company, or
it doesn't change anything.
Doesn't matter. Okay.
No.
And what about if it's a REIT, a real estate investment trust?
Real estate investment trust?
Yeah, a REIT.
REIT, but I don't think it changes anything because in the end you would. For a French resident owning a real estate investment fund, we have some type of structure like this in France, but they are not exonerated from real estate tax. What is exempted is if it's commercial building, if it's some type of building used for operating a business. Because if I was the owner of my office and I would not be subject to tax on the value of the office because it's part of my business. But otherwise,
no way. Okay.
No way.